Okay, hello and welcome everybody to today's weekly market forecast. Apologies for that brief interruption. This is the weekly market forecast for Monday, July 31st. This webinar is brought to you by OctaFX, the award-winning Forex broker offering you some of the lowest spreads in the industry. And without further ado, let's jump right into it, guys. A couple of quick disclaimers to start out with. Risk disclaimer: trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. You shouldn't invest money that you cannot afford to lose. Secondly, a hypothetical trading disclaimer: the information in this webinar is provided as general market commentary and does not constitute investment advice. First up, it's a technical presentation today, but we do like to keep track of the economic data, the economic highlights of the week. So let's just quickly run down through the most important data that's coming out this week. Tuesday at 5:30 GMT, we got the Reserve Bank of Australia interest rate statement. Thursday, 12 p.m. GMT, we have the Bank of England official bank rate and their monetary policy summary. And on Friday, we have the what's widely regarded as the most important market-moving figure, which is the U.S. employment report. Within that, we have the most important components, which are the non-farm payrolls number, which tells you how many non-farm jobs were added to the economy for the prior month. And also the U.S. unemployment rate. So look for the markets to have some potential volatility in those times, and particularly on Friday with the U.S. employment report. Let's just go over quickly what we're going to cover today. We're going to look at key support and resistance levels, recent and emerging chart patterns, looking backwards and forwards, key technical indicators, and trading strategies. As usual, every week we go through a different trading strategy, and we've got a really interesting strategy to cover today. It relates to correlations among different currency pairs. So let's get into it, guys. Let's look at the strategy of the day. Correlation trading strategy. This strategy that we're going to look at uses currency pairs that are very highly correlated, such as the Australian dollar against the Japanese yen and the New Zealand dollar against the Japanese yen. Over the past year, these two pairs have a positive correlation rate of 93%, which means that they trade in sync, or they trade in line with each other 93% of the time, which is a very, very high positive correlation rate. And that's what we're going to be using in this strategy to give yourself a high probability, relatively low risk trade. So the trading opportunities when you're trading correlations like this come up when the correlations go out of sync. So 93% of the time, these two currency pairs trade in line, but the opportunities arise when that 7% of the time when they go out of sync. So how do you go about using this strategy? Well, one way you can do it is to use a chart overlay custom indicator to display the charts of the two currency pairs which are closely correlated. Then once you've done that, you look for moments when the two pairs have diverged substantially. They're no longer trading in sync, or they're trading not as much in line as they normally are. And then this is basically an arbitrage strategy. It's not, strictly speaking, arbitrage is when you're trading the same security in two different places. So a classic arbitrage strategy would be, for example, you have one stock that's trading on the New York Stock Exchange and another stock that's trading on the same stock, trading on the London Stock Exchange, and what you're looking for is price inefficiency. So you might see that the prices diverged across the two exchanges, and you buy one and sell the other and wait for the two to come together. So this is a similar strategy, but you're not trading the exact same instrument. You're trading two different instruments that have a very high positive correlation. There's another strategy in the stock market called pairs trading, which is similar, where you might be trading two closely correlated stocks, for example Coca-Cola and Pepsi, and looking for divergences in the notion that they're trading in line with each other. So when they're normally trading in sync, that relationship gets out of whack, and the idea is to capitalize on that. So in the pairs trading strategy, you might buy Coca-Cola and sell Pepsi and wait for the two to converge again. Again, in this case, we're looking at two different currency pairs which have a very high positive correlation. So you get into the trade when simultaneously when you decide that, when you identify that the two pairs have diverged substantially. And we'll get into looking at this on the chart, and that'll make it a lot clearer. And when the pairs are trading back in sync, that's when you exit your trades. This strategy can be used across multiple time frames. By that I mean you could be looking at the 15-minute chart, the hourly chart, the 4-hour chart, the daily, the weekly, and so forth. I wouldn't recommend going below the 15-minute chart for this strategy. One of the nice things about this strategy is that it has low directional risk, because if one position is going, remember you're going to have two positions, you're buying one and selling the other. If one position is going against you, the other is statistically far more likely to go in your favor. So how do you decide when to get in to this correlation trade? Well, one way of doing it would be to look on the time frame on which you're working, whether it's the daily or the 4-hour chart. Go back and observe the widest gaps in the correlation over the time frame that you're using to gauge good potential entry areas. So for example, if on the daily chart the widest recent gaps when the correlation went out of sync was 500 pips, when you see the two pairs go out of sync by 500 pips, you know that that's potentially a good place to enter. Okay, so now let's jump over to MetaTrader, and we're going to look at the chart overlay, and this will be displayed for you visually, and I think it'll make it a lot clearer and easier to understand. It's a very straightforward concept, a very intuitive concept. So we're going to jump over there right now. I want to go in MT4. Okay, so here we have the two pairs. We have the Australian dollar against the Japanese yen here, and the New Zealand dollar against the Japanese yen here. And you can see that we're looking at the H1 chart, the hourly chart. Okay, so we can see here on this chart that they're trading pretty closely in line, but let's zoom out for a second. And here you can really see it. I mean, look how closely in line these two currency pairs are trading. It's staggering how closely in line they're trading, right? Okay, so let's go back and zoom into it again. So look at what happens here in this part of the chart. They've diverged pretty nicely here, right? Up here's the high, up here's the up here the Australian dollar against the Japanese yen is making a nice high. Now it's diverged. The New Zealand dollar against the Japanese yen is low here. So what you could do is buy the New Zealand dollar against the Japanese yen here, sell the Australian dollar against the Japanese yen here, and then look what happened. They diverged a lot here, but then what happens? They came back and converged here almost completely. So you would have made money on your long position here in the New Zealand dollar against the Japanese yen, price went up, and you would have made money on your short position in the Australian dollar against the Japanese yen here, price went down. So you made money on both of your on both of those positions. So that's basically how this strategy works. In case you're wondering how to get this this indicator, this custom indicator that allows you to do overlays on the chart, what you do is you go to File, Open Data Folder, then you go to MQL4, you go to Indicators, and this is where you drag your overlay indicator. So here you can see I've dragged in the overlay chart custom indicator here. You have to, once you've done that, you have to shut down MT4 and start it up again, and then it'll appear there. So that's how you can use chart overlays, and that's how you can visually understand how this correlation strategy works and look for good potential entry points for this trade. So okay, so that was this week's strategy. If anyone has any questions about it, please feel free to email me at webinar@OctaFX. And now let's jump over to MT5, which I typically use for my normal charts, going through the daily charts and so forth. So let's take a look at what's going on with the euro here. The euro's really been on a tear recently. We can see close to the highs here. We can see the prior resistance has become support here. And so the next question is, the logical question, I guess, for where we are right now is where's the next resistance on the euro here? And what I did, I think is useful, is to zoom out here, and you can see sort of more the context here. We had a big down move here, and we've had a retracement right here. So let's pull up the fib and see what that has to tell us. Okay, so we can see here that we're through the 38, pretty much. The 38% retracement level has been violated. Let's move this up a little bit, it's not completely correct. That's better. Okay, let me pull up the crosshairs here. So I think we're through the 38 now. And so the next major level of resistance that I'm looking for, if you're like a swing trader, you're trading with the daily charts, I'm looking for resistance in the euro to be up here at the 50% retracement level at 121.59. Okay, I'll just zoom back in here. I wanted to bring this up again briefly. We talk a lot about trend lines, and I think they're fairly intuitive to understand, and we can see we got a nice upward sloping trend line here, and I think the natural question is, how do you trade these? How do you use these trend lines in your trading? And sort of the obvious thinking is that you look for a bounce off the trend line. You see that we've already had this trend line been established here, and you could have looked for a bounce off the trend line here for price to move higher. That's a good start, but it's always good to look for other indicators to kind of strengthen the case for your trade. So if you're looking for a long position here was a good instance of where you had confirmation from the momentum oscillator stochastics. One of the most powerful signals from stochastics is passing from below 20 to above 20. So when price had retraced to the trend line here, you had the trend line support there, and you also had this secondary confirmation of stochastics moving from below 20 to above 20. And then we had this nice, fairly fluid move to the upside. And now we're very much in bullish territory, well above the 200 period simple moving average. Okay, let's jump over to the pound. We can see we have a nice sort of ascending wedge here in the pound, fairly well defined trend line to the upside here. And we have trend line support to the downside here. If price can break through this upper trend line here, you might expect follow through to the upside. We know that we're in more bullish territory in the short term, at least, because we're above the 200 period simple moving average, the old line in the sand. And again, let's zoom out, and again let's just pull up the fibs to see like potential resistance areas to the upside. And this is pretty interesting because, let's get this right here. Okay, I'm pulling the crosshairs here, because look here, we kind of have a confluence. We've almost reached the 50% retracement level of this swing high to low here, and we also have confluence of this upper trend line and the 50% level. So we have major resistance here. So we might expect, looking at this, a powerful potential reversal to the downside here if price can't break through this 50% retracement level. So price is getting close to a pretty major resistance level, which I'm showing to be at 132.39 right here. So if I was swing trading here, I might look for a potential short position in cable at those levels. Remember, we have big fundamental data coming out in the pound later on this week with their interest rate statement. Next up, let's take a look at gold. Again, we saw, a similar trade opportunity that we saw in the euro in this market, because we saw price return to this well-defined trend line, and we had the stochastic crossing from below 20 to above 20, and that ushered in a nice, fairly fluid move to the upside. Price has since retraced all the way down, come back up. It's pretty sideways right now, and it's holding above the 200, both the 200 and the 50. So I'm kind of neutral on my opinion on gold. I think we're kind of in a sideways market right here, but this bounce of the trend line, that would have been a nice entry to the long side. Price came back down, hit this well-defined trend line, and we saw the stochastics rise from below 20 to above 20. Let's jump over to the dollar CAD. This is an interesting chart because we had their GDP number came out last week. I mentioned it as one of the most important figures for the week, and it was a very positive figure. So dollar CAD sold off, which means the dollar sold off, but the US dollar sold off, but the Canadian dollar strengthened. So that's what we're seeing here. So price had broken out of this nice channel here. It's come all the way down here, and again we've got some really nice confluence here. We got the line in the sand 200 period simple moving average here, and the confluence of this major trend line, which goes back a long way. We're looking at the weekly chart, so these are really mega figures, mega support levels right here. So I would expect to see some fairly major support right around this area here. Next up, let's pull up the Guppy pound against the yen, one of the most volatile currency pairs. Currency cross. Crosses are currency pairs that do not contain the US dollar. So again, here we have a nice ascending triangle pattern, fairly well defined support to the downside here with this upward sloping trend line, horizontal resistance to the upside here, price contained, pressure building up within this ascending triangle pattern. If I was to have a bias, I would have a bias to look for a breakout to the downside, given that looking at the context here, we're in there was a fairly nice downtrend here, so the pressure may be more to the downside. Let's just pull up the fib quickly and see if that's telling us anything. And yeah, what do you know? This horizontal resistance up here is coincident with the 38.2 retracement level. So got really nice resistance here, and if price can rally back down here, it might even take out the low. Next up, we looked at this inverse head and shoulders pattern. This is a bullish reversal pattern, or just a regular head and shoulders is a bearish reversal pattern. The inverse head and shoulders is a bullish reversal pattern. Shoulder, head, shoulder. Here's the neckline. The logic of this trade is that you buy the breakout of this neckline here. Price did break out, but there was not much follow through, and you can see that price is like building up structure here. Let's move over to the pound against the Australian dollar, another interesting cross. And I wanted to look at this chart next to the head and shoulders chart, because the same logic applies to double bottoms as it does to head and shoulders. So we got a double bottom here. Similarly, we have a neckline here, and what you're looking for is a potential breakout to the upside of the neckline of the double bottom pattern. So you're looking for potential follow through to when price can break through here, and we're looking at the pound against the Australian dollar on the 4-hour chart. Next up, let's look at the dollar against the yen. Yochai, the fundamental analyst, Yochai Elam, the fundamental analyst for OctaFX, he pointed this trade out to me, and he pointed out this death cross, which is the 50 crossing below the 200. When that moving average crossover took place, we had a nice move down here, nice big red candle here. After that bearish crossover on the daily chart, and price seems to be continuing to drift lower, so definitely more in bearish territory here in dollar yen. Do just a quick recap of one of our prior strategies quickly. In this strategy, we're using the 10, 20, 200 simple moving averages. So what we're looking for in this strategy, we were looking to take crossover trades, bearish crossover trades when price is below the 200. So when price is below the 200, you're looking for crossovers of the 10 and 20. So here we had a trade, here we had a trade, here we had a trade. You only take sell trades when you're underneath the 200 with this strategy. Conversely, when you're above the 200, you take buy trades when the 10 and 20 cross over. So we had a buy here, a buy here. So you're using the 200 period SMA as a filter. Finally, I just want to look at this Australian dollar against the yen chart, and it's the one that we looked at in our correlation strategy. This one we're looking at the daily chart. Let's take a look at what happened on this daily chart. We had a nice up move here. At the top of the up move, we have a doji, which is a candlestick which reflects indecision. It's not necessarily a bearish candlestick. It depends where you see it. So in this instance, we see it at the top of an up move, and that gives us a clue that the bulls are running out of steam, that there's a potential bearish reversal coming up. Strong up move, and then they have this indecisive candle. What happens next? Big fat red candle. So that would have been a great place to get short. We had a secondary indicator here. I'm always talking about stochastics crossing above 20 or crossing below 80. We had the Stokes crossing below 80 here. So you had your a second clue that price might reverse there. So in the aftermath, sold off, kind of came back again. Now it looks like it's drifting lower again. So that's what was going on the Australian dollar against the Japanese yen daily chart. And with that, guys, I need to wrap it up. I want to thank you all very much for joining me today. If you have any questions about the strategies, the correlation strategy or the moving average strategies that we touched on today, using Fibonacci and so forth, do feel free to give me, shoot me an email at webinar@OctaFX. And otherwise, I wish you good trading this week. Watch yourself on Friday with the volatility from the non-farm payrolls report. Always makes a good show. It's some interesting trading, but do remember to exercise caution. So best wishes for your trading in the market, and look forward to seeing you back in the next week's webinar. Thanks very much for joining us.